VCs are pouring billions of dollars into the emerging electric vehicle industry in China. But despite the backing of the Chinese government, the electric car makers there are struggling as the nation's economic growth slows and subsidies are being phased out, as CNBC reports today. For one example, shares of NIO, China's closest competitor to Tesla, are down 50% this year. Woo! So China wants in on that EV boom, and obviously Tesla, as we know, doing very well in China. But I don't know that Chinese EV names are doing well. They're not keeping up.
They are not. Look at that chart. It's not a good-looking chart. But that being said, Tesla, remember, is planning to open up that Shanghai gigafactory very, very soon. And if they do that, that cuts the cost for them in terms of importing or exporting their vehicles to China. That might be even worse for companies like that.
I was going to say it's done already.
Yeah, they opened it already.
They've already
the European one.
They haven't actually started the line yet because they still need to get some approval from the Chinese government. But I mean, it's done already. So I was going to say, basically, it's too late for any other game in China. The factory's already done. I think one thing though to watch is these large automakers that are partnering up with one another to develop autonomous and also electric vehicle technology. One example being Ford and Volkswagen, right? So not necessarily in China, but when you consider that China is one of the biggest markets for Volkswagen, Ford and Volkswagen teaming up to try to build an electric vehicle is pretty big for the Chinese market. So it's not necessarily the Chinese vehicle makers that might be then worth watching in China. It's going to be all those global manufacturers really trying to invest into that huge automotive market.
And of course, the EV company is just one example of the very interesting story that will continue in 2020, which is U.S. companies doing business in China, ignoring what is going on. Now, of course, we have that phase one deal. But a lot of those brands that people said, oh, watch out, they are going to see dips in China, didn't really. Nike, Apple, Starbucks.
And that really came into focus too during the Hong Kong protests when we saw some companies not necessarily take a stand in some cases, but just by sheer virtue of listing on the back of a T-shirt that it's Hong Kong instead of Hong Kong, China, that they would get dragged into.
Right,
and they would get dragged into the spotlight here in the United States, in the Western world, over what the business ties were to China. And I think that was a really constructive exercise. What we've seen, though, I think, is that kind of fizzled out. People don't really care. I think that there was some activism in terms of maybe trying to boycott some of these companies that wouldn't stand up in terms of human rights problems in China, but it just hasn't been the case.
Oh, look at the NBA. There's a little bit of an overhang there, but yeah.
But they're still airing games, right? Remember, they stopped airing the preseason games?
CCTV has not started airing games again. Tencent.
Right.
It's still blacked out, yeah.
Right, but to your point, companies are still mentioning the fact that the Hong Kong protests are affecting their business. Remember, we ran through that really long list of companies that mentioned it on. Exactly. So at the end of the day, it does matter, and China will always matter to U.S. listed companies.